The financial world is constantly changing. With the advancing digitalization in the 21st century, this process has accelerated rapidly, opening up new opportunities to think about finance differently. Digital currencies such as Bitcoin and Co. shake the world positively and negatively. The concept of tokenization opens a new chapter in the history of capital investment. Decentralized, democratic, controllable, non-stop. These are the promises of tokenization. But what are tokens anyway, and how do they work? Meconomy takes a look at the complex world of tokens, examines theory versus practice, and talks to experts from the crypto and fintech scene. As early as about 5,000 years ago, people traded by exchanging goods or services. Over time, opportunities developed to also trade shares in goods or services, and even sell them to the public in order to raise capital. This is how the stock markets came into being, where companies offer individual small company shares to a variety of investors to invest in the future of the company. This need for shareholding has increased more and more, and ultimately developed into the global financial market. Tokenization meets this need in an even more extreme way. This is because tokenization is a further segmentation of a unit or component into other individual components. A kind of fractionalization. For example, shares can also be further fractioned, and the resulting units can in turn be traded. However, the special and new thing about tokenization is not the segmentation, but its linking with another process that makes tokenization interesting in the first place: the digital and decentralized storage of the fractions on a blockchain. Individual sectors of the market for tokenized assets are currently still in a kind of discovery or experimentation phase. Its value is estimated at less than $20 billion. The value of the total market for digital assets is about $350 billion US. This is where the enormous growth potential becomes clear. Tokenization and blockchain technology could fundamentally change the financial and banking sector. By 2027, this growth will increase dramatically to an estimated $6.89 billion. FinTech is one of the biggest players that will shake up the digital token game. In 2022, the United States held the largest market share. But what is tokenization? How do all these new token-based players operate in the FinTech market? What is their agenda, and what are their products? In Europe, Luxembourg-based Tokeny Solutions is one of the market leaders in providing an institutional and modular end-to-end platform that enables the issuance, transfer, and management of tradable digital assets and security tokens, such as tokenized loans, structured debt securities, stocks, and funds. This private B2B company provides an end-to-end platform for the unified issuance, management, and trading of service and security tokens. The company valuation for Tokeny Solutions ranges from $22 to $33 million, with a revenue estimate of $6.5 million for the year, and a fund of $11 million. The company uses Ethereum and Polygon's blockchain technology and works with the ERC-3643 token standard. Another interesting player in the European market is the Berlin-based company Bitbond. They have launched the first security token offering in Europe. This was approved by the German financial regulator BaFin in 2019. Bitbond is a technology provider for the tokenization infrastructure of digital assets. Their Web3 product, Token Tool, allows their customers to create, manage, and distribute tokens and NFTs through EVM chains. The Bitbond token, or BB1, is a security bond token that can be purchased with Bitcoin, Ethereum, Stellar, or Euro. The value per token is equal to €1. Their global market share is currently less than 0.1%. But with a team size of less than 50 people, it is valued at around 16 to 19 million US dollar as a company. Bitbond is a private company with a capital of $13.2 million. Its revenues will be around 2 million US dollars in 2023. But how does it work exactly? Bitbond uses the ERC20 token standard. This is the most commonly used security token in the FinTech industry. He stands for tokenized assets that comply with current regulations for securities in the form of a token. And through a company such as Bitbond or Tokeny Solutions, the buyer can buy and trade such a security as a token. The acquired token is implemented on a blockchain. These blockchains are called Ethereum or Polygon.
I'm Radoslav Albrecht, founder and CEO of Bitbond. A token is a term that has been around for a long time, and it basically stands for the fact that an object or digital good stands for something else. For example, if you go to a fun fair and pay admission, you often get a token, a plastic chip, which you then hand in the carousel, for example. And that's where the term originally comes from.
My name is Markus Kluge. I am a co-founder of Tokenforge. The best-known standard is the ERC20 token standard. It's basically just a small register in which anyone who has received a token there is granted access and is the only one who can move it with a private key.
Was man so in der Tokenisierung in der Blockchain so versteht.
This is what is meant by tokenization in the blockchain. And that's what happens without regulations and without access from any administrator or from any regulated party, with a high risk that if you lose your private key, you won't be able to access that token and you won't be able to move it. You won't be able to sell it.
From a technical point of view, a token is basically a database entry, and it says which address, which is basically the digital place where a token is stored. How many pieces, how many tokens it has, and this is implemented by what is called program code, which in the context of blockchains is also called smart contracts.
Blockchains auch Smart Contracts genannt wird, also smarte Verträge.
But basically it is program code that describes what the technical properties of the token are and who owns the token and who holds these tokens.
Wem gehört der Token und wer hält diese Tokens?
It is crucial for tokenization, which involves creating database entries connected to specific token owner rights, to have a register or database where the entries can be easily read and securely stored. The ERC20 standard fulfills this function and is implemented on a blockchain, ensuring security.
Token represents a value or service. They have been present since approximately 2014 or 2015, when Ethereum blockchain was developed, the first blockchain where digital assets such as tokens could be created. This initiated the development of digital tokens, and since then, the term has been in use within financial technology.
Now with blockchain technology, using cryptography and signatures, individuals can take more personal responsibility. This is because all participants can verify the ownership and transfer of assets. The private key public pair ensures the secure transfer of these assets.
Cryptocurrencies are also tokens, created and managed by companies or other entities, rather than institutions. Technically, cryptocurrencies are not currencies, but function as digital assets that allow for exchange and trade. These digital assets are generated through initial coin offerings, ICOs.
The inaugural initial coin offering was of Ethereum's creation, introducing the technical token concept for commercial use. Subsequently, many other companies leveraged these technical capabilities and issued additional tokens.
My name is Erwin Voloder. I am the head of policy for the European Blockchain Association. if you want to buy the argument that crypto is political, I think it is. And I think it's been political since the Genesis block. So if you look at actually what's inscribed in the Genesis block, so the first block of the Bitcoin blockchain, it's Chancellor on the brink of second bailout to banks, right? And this was during the height of the 2008 financial crisis. And specifically, you can look at the Genesis block as a picket sign. It was a protest, really, against what many people viewed as financial injustices that were incurred at the cost of the people for the benefit, at the cost of the majority for the benefit of a minority.
Tokenization and cryptocurrencies are shaping a new section of the capital investment history. This innovative investment method is transforming society, politics, and markets. The innovative concept allows the division of assets into numerous small fractions. Although not a new concept, fractional ownership is consistently popular in financial instruments. Companies have historically been divided into smaller fractions through shares or funds. Yet, the novel aspect is registering these fractions as digital tokens on a blockchain.
From a technical perspective, there are three primary standards that dominate the industry. Although numerous others exist, these three can effectively map all use cases. Companies utilizing this technology then produce tokens, of which there are thousands. While there are approximately 5 million distinct tokens presently in circulation, they are all based on the same technical standards. However, various values can be represented using them. For instance, stable coins are a type of digital currency that represent fiat currencies like the euro and the dollar. Additionally, tokens can represent securities, including bonds or shares.
Tokenization allows you to transfer value with a technical substrate that enables the removal of a lot of different frictions. And these frictions also lead to cost reductions. So instantaneous settlement, fractionalization, it opens up the door for new use cases like pay-per-use models, streaming money, and generally the ability to take real-world assets and represent them in a digitalized form and then offer them to investors in new ways to package financial products. The ability to ease frictions in cross-border payments as well from an institutional perspective. And I think also what's very important is tokenization and tokenization within blockchain has the ability to produce a higher level of financial agency and financial inclusion, which I think is ultimately really important. Otherwise, why are we doing all of this?
All assets can be digitized and standardized, enhancing liquidity and transparency. Automation of processes is now possible to an unprecedented extent.
Softwareentwickler haben sich Gedanken gemacht, wie man Tokens standardisieren kann.
Software developers have been considering ways to standardize tokens. The importance of doing so lies in the fact that tokens are held in digital wallets, and not every wallet can store every type of token.
Und deswegen hat man gesagt, wir etablieren einen Standard.
Therefore, it has been suggested that a standard should be established to enable wallets to support as many types of tokens as possible. Developers proposed open source software, and the market adopted particular technical standards based on their effectiveness. These standards have become prevalent, with two dominant token variants: the ERC-20 standard for fungible tokens and the ERC-721 standard for non-fungible tokens. These ideas, initially suggested by developers, have since become indispensable and are widely used throughout the world.
Von Entwicklern, die sich durchgesetzt haben und die jetzt weltweit sehr, sehr intensiv genutzt werden.
But the true highlight of tokenization lies in the affordable entry prices for investors that are associated with the smaller stakes.
The one challenge that that blockchain, crypto, or I should say that crypto faces, and you see this in decentralized finance, is the end user or the user experience, right? Using these financial products and services is oftentimes tricky and challenging, or requires a certain level of technical literacy that not everyone has, and also at the end of the day, it's generally driven by interest. I don't think you can make the argument and say that everyone will use this all the time, everywhere, because that isn't the case with anything now. So why would it be any different? Human nature is a fickle thing. So I think that the point should be to make it as easy to use as possible, as frictionless, as seamless as possible.
Issuers can save money through tokenization, which enables them to access funds directly without the need for an intermediary, thus eliminating the high fees associated with working with investment banks or other institutions.
I'm Elizaveta Palaznik. I'm an economist by background, and to this day I help basically crypto asset service providers, law firm, consulting firm navigate through this new European regulatory regime that we have in crypto asset, which we call MiCA, Market in Crypto Asset.
The MiCA is an EU legal framework for cryptocurrencies and tokens that are traded on digital platforms. It replaces the individual regulations of the individual countries.
So MiCA basically aims to target some specific assets in the crypto industry and certain services linked to those crypto assets. So if we take the parallelism to the traditional financial sector, we have MiFID, which cover financial instruments. Now we have MiCA that covers some type of crypto assets, which are in three big categories, which are the stable coins and the other crypto assets, including utility token.
With the implementation of the Markets in Crypto Assets regulation called MiCA, a consistent EU-wide framework has been established.
So it will change a lot of things in the regulatory landscape and also in the crypto industry itself, because as we know, all the continents have their own approach, or sometimes they don't have any approach at all. So I think it will change a lot of things, and also within the financial sector as well. Why? Because the traditional financial sector so far, if you go to a bank and you want to buy some Bitcoin, your banker will most likely refuse this request. Some of them, they jump on board it, but 99% will say, no, we don't do it. After MiCA comes into force right now, what they can do is actually they can offer those services without even having the MiCA license, which can be quite a bit of polemic, because it's not because you're a bank or financial institutions that you can actually understand and you have the experience and the knowledge to provide those services.
Cryptocurrencies are traded via crypto exchanges. Utility tokens represent a specific benefit or functionality on a platform. There are different types of tokens that can serve as financial instruments. Security tokens act as digital securities. They can have the characteristics of shares or bonds.
Ein Security Token ist ein Token, der normalerweise
A security token usually certifies a security. It is technically referred to as the ERC20 token and is similar to a fungible token with some additional features.
bei Wertpapieren häufig.
It is crucial to identify the token holders for securities, and specific technical settings can be implemented to restrict the transaction of these tokens to a particular whitelist of recipients. By approving which recipients can hold the token, you are indicating their authorization. Security tokens are commonly designed this way, as issuers usually need to know, and sometimes may be legally mandated to know, the owner of the tokens.
Möchten oder auch teilweise gesetzlich wissen müssen, wer diese Token hält. Dann gibt es Tokens.
Utility tokens, on the other hand, refer to tokens that operate as platforms or specific currencies. Imagine that, for instance, you do not utilize standard currency on social media, but a token that has been developed particularly for these platforms. Subsequently, you can exchange this token for certain features on the platform.
Bestimmte Dinge auf dieser Plattform nutzen.
The process of tokenization starts with gathering objective information about the asset. This may involve obtaining a detailed depiction of a property or an inventory of artworks within a collection along with their specific attributes. The collected data is then digitized and securely stored. A unique token is subsequently created that represents the ownership rights to the physical asset being described. The digital token is securely stored on the blockchain, and owing to this specific information, bears a distinct digital signature of the asset.
Es gibt eine ganze Menge Widerstand, einfach weil
There is considerable opposition because it represents a new technology and a paradigm shift in approach.
wenn man
Previously, when moving a security from A to B, the physical transfer was necessary, hence the creation of securities. Now, however, there is only a register. It is sufficient to modify access rights to a token and transfer it.
also indem ich den transferiere. Das heißt,
In essence, the security is now linked to the asset and no longer a freely transferable security. This change has various consequences for the processes involved. Our current objective is to integrate all the available technologies, such as digital identities, digital currencies, and tokenization in a manner that achieves genuine democratized access.
Dass halt eben der Zugriff halt eben wirklich demokratisiert wird.
Once a token has been created and saved on a blockchain, it can be managed through smart contracts. Smart contracts allow for rent payments to be transferred to an investor in proportion to their investment as soon as the rent is received. Alternatively, a smart contract can automatically trigger payments once specific project milestones are reached.
The interesting thing about token is, you could say it's a smart contract that is registered on a blockchain, but in the end we talk about programmable values. I don't want to say money here because there might be a difference between money and its regulation and transferable values, but it will be very important, for example, if we think about sustainability, that we not only introduce a new digital asset, but that it generates impact. So we need to add meaning to a certain nominal factor. And this will be, I think, the most relevant aspect of tokenization, that we create digital units for whatever underlying asset, but that we can optimize its use, we can incentivize certain behaviors.
Investment in tokenized real estate represents one of the most recent advancements in the property industry. Tokenization enables houses and apartments to be divided and sold in numerous smaller units. Small programs act as a bridge between the property and an online trading platform. Hence, tokens create a digital representation of a property, facilitating its digital transfer.
Many potential investors are either unwilling to enter this market on a large scale or unable to do so due to factors such as lack of equity or difficulties in obtaining debt financing. The concept of tokenization offers a significant advantage by enabling the smallest unit of investment to be acquired at a much lower threshold.
For instance, a flat owner could split a property worth 100,000 euros into 1,000 tokens. Each token would be valued at 100 euros, representing a small portion of the flat. Investors would then hold the rights to a particular percentage of rental income with each token. After deducting costs like property tax, repairs, and insurance, investors stand to profit as the apartment increases in value over time and rental income grows.
Another benefit of tokenization is the ability to convert the individual tokens anytime, 24/7, via apps or trading platforms. Furthermore, the need to visit a notary and have the property or share in it notarized before purchasing is eliminated.
Purchasers can efficiently manage their tokens through a mobile wallet application. The app's features may vary depending on its design, allowing users to track their incoming payments, monitor token value fluctuations via chart displays, and sell tokens through their smartphones. Real estate tokens follow similar regulations to securities and do not provide physical ownership of the underlying property. Essentially, a real estate token functions as a loan that the provider utilizes for property financing. The loan's interest is covered by the rental income, which poses a risk of loss. The possibility of rent defaults and, in extreme cases, the provider's insolvency increases this risk as compared to investing through a property fund, which is usually diversified across many properties.
In Germany, such a scenario isn't yet to be realized due to the absence of a regulatory framework that facilitates securitization of property rights associated with land and real estate.
The process of purchasing a property is still associated with significant bureaucracy, lengthy procedures, and subsequently high costs. Digital art projects were the first to bring tokenization to public attention. With the assistance of non-fungible tokens, digital art pieces are typically secured as a whole in the blockchain. In March 2021, American artist Beeple sold a digital collage comprising 5,000 individual images for an extraordinary $69.35 million at an auction. A single tweet by Jack Dorsey, founder of Twitter, was purchased by a fan for an impressive sum of $2.9 million.
My name is Everfresh, also known as Sebastian Pfeifer, so that's my real name. We are not going to see anything like we've seen in 2021, so that ship has sailed. My hope actually is that the market will reach a more mature state where price levels are reasonable and artists can actually live off their art sales in that digital space. It's never gonna be everyone, that's clear, but you know, like that's not how it works. So it's always just gonna be a few that will be able to make a living out of it.
If you look at the sheer numbers, the people collecting crypto art is growing and growing and growing. My name is Sergio Roberto Schmolt. I'm the founder and CEO of Magal. Magal stands for Meta Art Gallery. There is of course the 2021 January bubble where you had a crypto art NFT market explosion with 14,000%. If you have such a high increase, you fall down very, very briefly. So what we are doing right now, we are trying to get a new base level. And from that level, we can progress together with crypto, together with Bitcoin, together with everything that is behind it.
Art tokens may be obtained from any location worldwide, allowing for international investment in the art industry.
Twitter is the main platform to promote your stuff in the NFT world, and you can also use other social media platforms, but Twitter is by far the one with the most impact. I reach my audience mainly through Twitter. Of course, I promote my work on other social media platforms as well, but I've not noticed any correlation directly to sales through other platforms than Twitter.
I would say the biggest trend right now is the thing that we are doing, coming from the metaverse and coming into in real life. So you can only feel crypto art if you can touch it, if you can see it, like here on our screens. And this is the step that a gallerist needs to do.
With the assistance of non-fungible tokens, digital art pieces are typically secured as a whole in the blockchain. Despite an artist creating multiple NFTs of an identical image, each NFT possesses a distinct identity within the blockchain.
Und das bedeutet, das sind Token,
And that means these tokens are essentially unique. We can illustrate this concept by considering a €1 coin. When we hold this coin in our hand, we do not distinguish it from any other €1 coin, as they have identical purchasing power. Such coins are referred to as fungible. The same principle applies to securities, such as BMW shares. We do not differentiate between individual shares, as they are fungible. The BMW share represents identical voting rights and value. Non-fungible tokens, NFTs, can be likened to artworks, such as owning a unique Picasso painting or the Mona Lisa. While forgeries may exist, the genuine Mona Lisa is one of a kind and non-fungible, with no other exact copies. Art also employs the concept of limited edition prints, where a photo may have, for instance, only 100 copies, each with a unique number.
Ein Fotodruck eine limitierte Auflage hat, 100 Stück beispielsweise, und jedes einzelne Foto.
These numbered prints belong to a specific series. Although numerous tokens can be used, the idea is for each token to be exclusively identifiable. On the other hand, fungible security tokens are identical and can be exchanged for each other.
Identisch und austauschbar sind.
So you have some gray area, I would say, also regarding NFTs. So we have DeFi NFTs are not covered, so non-fungible tokens. However, it's not because you call something an NFT that it won't be under MiCA. So they really are mentioning that if something is issued in a large series, it's an indicator of the fungibility. So then it doesn't necessarily mean it will be an NFT. But again, what is a large series? We don't know yet. So we hope we'll have some clarification down the road. But so those little things, we can play with words, you don't know, especially that the technology evolved so quickly.
Most NFT sales are actually auctions. They're not auctions in the classical sense, where there's like a guy with a hammer, but it's just you usually put your piece on a platform. with a reserve, and once the reserve is met, then there's like you can define that how long the auction goes, but usually it's like a 24-hour auction, and then the timer starts and it runs for 24 hours, and then it depends if other people put in their bids as well, if the price goes up or not. Most platforms take between 5 and 15%. Some also take 20, most take between 5 and 15%.
Tokenization can be a useful tool for making art accessible to a large audience. It simplifies the process of investing in art, making it easy, safe, and reliable for artists themselves. Is tokenization a promising way to sell artwork? In theory, artists could even offer themselves as capital investments to investors. As a result, artists can generate a steady stream of additional income. If their value increases, investors will earn a profit.
The art market remains considerably unclear, necessitating a thorough knowledge of the players, the influencing factors, and the dynamics of this market in order to be competitive when buying works of art. Our collection of works from the top 100 artists is usually unavailable at local galleries, but is sourced from the leading international galleries. Without access, artwork becomes either unobtainable or extremely expensive due to multiple trade flows, each resulting in price increases.
Fractional ownership of an asset in the art industry is demonstrated through art security tokens, ASTs. These digital assets correspond to a portion of an artwork.
Previously, this market was exclusive to the super rich due to the exorbitant prices of art. Prices are often in the millions, which few can afford. But art trade is changing that. We possess a meticulous network of art experts who identify appealing works on your behalf. The entire process involves a complex data analysis procedure. We digitally store all the relevant information. Each artwork is assigned a single digital security, which comes in the form of a security token. The value of one token corresponds to €1 of the artwork's issue value. In essence, this is a fully regulated digital security, as per the new Electronic Securities Act.
Voll reguliert nach EWPG, nach dem neuen elektronischen Wertpapiergesetz.
This allows us to treat the token and the security similarly to other conventional securities, ultimately facilitating their integration into the financial industry's infrastructure.
Auch eine Infrastruktur der Finanzindustrie zu integrieren.
Thanks to their assistance, anyone can now invest in works of art that would typically be excluded from an average investor's portfolio under normal circumstances.
You can invest in these works of art indirectly with as little as €1,000 by purchasing these tokens. This ensures that art enthusiasts with smaller budgets can engage in magnificent art projects.
Even the classic artworks are now available on the blockchain. Most recently, a blockchain token was created for Pablo Picasso's renowned masterpiece, Philipp Pieper. The responsibility for the tokenization fell upon a crypto bank situated in Zurich, which split the oil painting into 4,000 individual art tokens, each valued at 1,000 Swiss francs. These tokens were subsequently transformed into blockchain-based securities that offer a clear-cut, legal right to the original and one-of-a-kind painting dating back to 1964 in Switzerland.
As an investor, you do not acquire a piece of the artwork itself, but rather a securitized claim to participate in its performance. We made a conscious choice to avoid fractional ownership and instead opt for a security, as it aligns with a traditional investment product and can seamlessly integrate into the financial system. When works are traded on the secondary market, often after a prior purchase, the artist or artists typically do not participate further. However, We aim to expand this model in the long term by exploring the potential of structuring tokens and smart contracts. Currently, this concept remains uncertain. This would allow the artist to maintain a permanent stake in the value development of their artwork through a percentage of ownership.
I see a very bright future when I look at my kids, the things they collect, Fortnite skins or some digital weapons for a game. This kind of collection feeling is parallel to crypto art collection. Yeah? So people will not hang a Picasso in oil painting on their wall. My kids will not do it, they will collect other art. And this may be the art that they are collecting.
Large art galleries, museums, collections, and storage facilities for works of art may benefit from tokenization in the near future. These institutions invest considerable sums in protecting their works of art against theft and vandalism, which is a costly undertaking. Museums often lack sufficient funding through entrance fees and other sources to expand their collections. Tokenization has the potential to provide much-needed liquidity. It could potentially provide investors with the opportunity to profit from the increased value of the artwork by making the collection or a portion of it available for investment. A share represents a security that a company issues. Depending on the kind of share, it may entitle the holder to a portion of the profits, dividends, or voting rights. Companies issue shares in order to raise funds for their business development. However, despite advancements in digitalization, trading in shares remains inefficient in many areas. In the event that you wish to invest in shares, buying an entire share is typically a necessary. Yet, shares from large firms often cost more than $1,000. This narrows the pool of individuals who can accommodate its cost. Moreover, obtaining ownership in a few major corporations constrains your potential for portfolio diversification through investment in multiple shares.
My name is Philipp Pieper. I'm the founder of Swarm. We are a tokenization platform that does both primary issuance as well as secondary trading. In the past 2 years, there's been obviously a very high degree of focus on crypto assets. So basically, Bitcoin and derivatives of Bitcoin, as well as sort of other native assets that were on sort of the blockchain like Ethereum. But it's been shown obviously that there's a very high degree of correlation amongst all these assets. So if the market goes up, everything goes up. If the market goes down and crashes down, everything goes down. So in that world, there is a need to actually have something called real-world assets replicated onto chain, which actually derive the value of what they are from the underlying asset that is connected with that kind of digital asset. So a good example of that is basically a stablecoin.
Tokenization enables the purchase of fractional shares in large companies. Rather than obtaining an entire share, partial purchases can be made to generate a proportional yield. Digital securities can be created through tokenization, referred to as token derivatives, which are secured on the blockchain and thus embedded in a more versatile infrastructure. Essentially, shareholders receive a conventional share, but with benefits aligned with cryptocurrencies. The value of the tokenized share is always equivalent to the share price of the company that issued it. If the value of the deposited share doubles, then the tokenized share's value also doubles. The price analysis of tokenized shares is like that of shares, as opposed to cryptocurrencies.
So a stablecoin is effectively a token that represents maybe a dollar. So one token equals $1. You should actually have the ability to put anything that has value, anything that has some kind of substance onto the blockchain, into these trading environments, into the ability to fractionalize and mobilize these assets. There's a very large realm of different asset qualities that you can gain by putting them as a digital asset onto chain. So if you have one Apple stock that is represented in one token, well, you can buy a cent of an Apple stock if you want to, right? That you cannot do in the traditional markets.
Tokenization significantly reduces the barriers to entry into the new financial markets. The majority of all companies worldwide are presently private companies.
There's derivative products that probably mimic some of that, but it's not the degree of flexibility. The second thing is that you actually have an immediate settlement. So if I go onto some kind of exchange, some kind of decentralized exchange, some kind of trading venue, and you and I agree on a price, actually by executing on the blockchain, immediately the transfer of my ownership to you has been executed. Normally in the financial markets that takes 2 to 3 days to settle.
From a regulatory perspective, the United States is also in a unique position because of the dollar. So, the dollar is, was famously once said that the dollar is the United States currency, but everyone else's problem. But really, I don't fully buy that argument. I think that the dollar is also the United States' problem now, because you have jurisdictions in other parts of the world that are essentially creating regulation for digital US dollars in the future. And none of this is coming from the US yet. So, regulating stablecoins is one of the lower hanging fruit that they could tackle in terms of reasserting this position of dollar hegemony. And this is not a position that Europe has to the same degree. I mean, the US dollar still makes up somewhere around like 60% of global reserve. The United States political system is also by design an invitation to struggle. And it has been since the Declaration of Independence. So you always have to, when you're looking at the US, you always have to think of this.
The tokenized shares serve as a link between conventional stock exchanges, such as Xetra or the Frankfurt Stock Exchange, and a cryptocurrency exchange like Binance. Token transactions can be processed in mere minutes, contingent on the network and crypto exchange.
If you have the ability to trade on a 24/7 basis without any kind of stoppage of the market, it's a benefit. It actually means real money for people. If you can attach governance processes to these technical things, it is a benefit because you have a much more real-time interaction with the way that the asset down below can actually transact. But even more so, if you actually then have the confidence, which means that you have some data that is connected with the token that points to where it actually goes and what it represents, and the live data reporting what it actually has in terms of values, then suddenly you're not reliant on a quarterly report, but you have a real-time view on it.
As smart contracts perform buy and sell orders of tokens on a blockchain, there's no longer a need to rely on a broker or banker as an intermediary.
So I would say that broadly those would be some of the aspects where tokenization will transform the financial industry. Whether or not you buy that there will be a complete removal of intermediaries, it will certainly limit the role of intermediaries or diminish the frequency of intermediaries in certain financial transactions.
In the world of tokenization, in the end, it all represents something that has some kind of resemblance in real life. So there's a trust element that needs to be created, which also means that if the token gets lost, it really depends on how you set it up. You can actually sort of then make sure that it's either, respecting who the real owner is, so, or basically gets redistributed back to the original owner. It's just an efficiency technology.
Selling company shares involves lots of people and takes a while due to bureaucracy.
We need to unite the technical possibilities and the traditional world. The latter insists on maintaining the status quo, as it has proven stable over the last few decades. There are stakeholders who profit from this, naturally. And conversely, the DeFi and crypto community advocates for self-determination in every aspect. However, the reality likely lies somewhere between these extremes, and we must construct accordingly.
Investors cannot access these companies. Financial institutions usually invest in these companies using costly loans or investment funds. Thus, the market experiences low levels of liquidity.
Yes, I think it will affect more the B2B space, because for us as end users, we are interested in usability and of course in trust, but we're not necessarily interested if a banking or FinTech app is using technology A or technology B, especially if we talk about mass adoption. Then this should not play a role. It should be a well-performing app.
Investors usually make long-term investments. However, if the company management changes its direction, it is not easy for investors to exit. In such cases, they may attempt to influence the company management.
Just to think of this as, well, it's an open system and therefore everyone has access, that's also not entirely true. It means that depending how you set up the system, and that very much depends on what asset it represents, you have restrictions that you artificially have to build into the system, that only a certain type of customer can buy into those specific asset tokens, or that there's only a certain behavior that is allowed to be executed with the token. So there's a very much a technology enforced restriction. But what it gives you is actually a much higher degree of confidence from a regulatory process as well, that because it's code, and because it's actually enforcing what the code is being told to do, that you cannot really bypass it.
We expect tokenization and blockchain technology to play a role to design more efficient and streamlined processes. So that's step number one. Then we will potentially tokenize and also use blockchain technology to finance in different ways and to tokenize different assets. So that's, let's say, a growth aspect. Depending on regulation, but also on, let's say, strategic decisions, some fully automated neo-blockchain banks or neo-blockchain players are on the market. We can expect that new use cases and a whole new set of process designs will see the day of light. So this means a totally new category targeting new use cases that are not right there available.
Discussions regarding the energy industry's future increasingly center around energy tokenization. Renewable energies have grown increasingly popular in our current era. Wind and solar parks continue to attract a growing number of investors.
My name is Ekow. I am CEO of Realport. Decentralization of energy is already there, and it's only going to accelerate. I think the past years, considering the Ukraine war and considering the strive of governments and our society to become more independent, has shown an incredible boom of rooftop solar and decentralized energy. So as not only the companies and the supply chains grow more mature, it's going to be even easier for tenants of houses and for owners of houses in order to, number one, put solar into the roof. And then it's a matter of connecting that amongst the various decentralized hubs, meaning from one roof to another, and into the grid in a smart way. And I do think that technology can play a fantastic.
The energy sector's intricate network is hindered by outdated infrastructure and numerous inefficient processes. Utilizing blockchain can enhance the efficiency of the energy supply.
And efficiency means saving costs. Saving costs means that you can bring in smaller projects, and smaller projects also means that you can bring in smaller investors. Biggest advantage is for the smaller guys. It's making it more efficient, making access more efficient, and also enabling smaller wind farms in order to participate within the energy economy.
Thanks to its decentralized architecture, it can document the supply chains of multiple energy producers simultaneously, which is a much more complex process with centralized systems. In such systems, every producer has to first send their data to a central location for bundling and processing. In a decentralized blockchain network, anyone can feed the data directly. By means of tokenization, a digital copy of each physical energy unit can be stored on a blockchain. This automation of administrative processes can significantly reduce the cost of energy.
The way we see it, there are two different forms. One form is sharing the economic performance out of an energy project or out of a renewable energy project. That means a generator wants to set up a wind farm and needs investors, right? And will promise essentially the proceeds of this wind farm to be shared amongst the investors. So now we can tokenize essentially the future proceeds of these of this project with multiple investors. So that's one part. And the much more difficult part is how do we certify renewable energy, through national agencies and make it fungible or tradable in a sense.
Blockchain technology allows for the tracing of energy from the source to the end consumer. Certificates can be issued if required for proof of purchase. This can be a crucial factor, particularly considering the stringent regulations for renewable energy. Currently, it is difficult to ascertain whether the energy derives from wind, solar, or another source. A third party is required to certify the origin, and these certificates may be traded. Greenwashing is facilitated.
There's various legislative and also regulatory aspects around that. Number one is the EU taxonomy, which nowadays tells us what is green, what is not green, so that gives guidance to investors and also to the issuers of financial products. And number two, there is also a self-disclosure regulation called SFDR. So every publisher or every issuer of financial products will need to self-assess themselves whether they are highly sustainable, Article 9, or not sustainable, basically Article 7. And that will give consumers tremendous guidance as to what is green, what is not green. So that means the leeway to kind of move around and kind of greenwash has becoming a whole lot smaller.
Tokenized certificates can be produced by the supplier, providing an indisputable origin of the energy generated. These certificates are securely stored in the blockchain, ensuring that the data cannot be altered.
Governance Token ist eine bestimmte Art.
Governance tokens are a particular type of token that some companies issue, especially those in the technology field, or what are called decentralized autonomous organizations. These tokens grant certain rights to their owners. In terms of technicalities, they are often the RC20 tokens, following the standard that many other token types adhere to. But the rights they confer may differ from securities tokens. For example, voting rights are frequently represented by governance tokens, which are issued by companies and owned by those who purchase them. By possessing governance tokens, I am granted the right to vote on certain matters. If a company wishes to make changes, such as implementing technical modifications, token holders have a say. This means that not only do I get money if I keep this token and expect to make a profit in the future, but I also have a say in how things are done and can join communities where my opinion counts depending on how many tokens I have.
Now, the big challenge here lies, how do consumers, be it a business consumer or even a regular retail consumer, buy into certificated or into certified renewable energy sources? And that's where blockchain can provide a huge benefit. And the vision is that eventually you'll be able to match certificates at the time of production with consumption at the time when you really need it.
Tokenization will increasingly facilitate investment into wind farms and other renewable energy sources. The process of investing in a solar park using tokens will soon become common practice. The same principle will apply to the purchasing of electricity from various energy sources. Specifically in the field of solar energy, the initial suppliers have already implemented the tokenization of their plants. There are also wind power plant platforms that connect plant operators with companies and private individuals. Tokenization allows token owners to become co-owners of a wind turbine and generate proportional returns by selling the generated electricity. Additionally, plant operators benefit from tokenization since it provides another opportunity to directly collect capital for the plant, giving them access to high liquidity. However, the management of energy is still largely centralized. There is considerable progress to be made before the new technology is widely adopted.
The next step is now connecting neighborhoods. The same way as larger projects of renewable energies are now participating entire communities in exchange for the permission of erecting a solar farm or a wind farm into participating into that, right? Into the consumption of the energy which is being produced. And that will also create communities which will be able to dispatch and to trade energy amongst themselves and amongst multiple communities. So yes, it is underway. Difficult to say really, right? I think, Germany is probably the largest in Europe rooftop solar market in that respect, has the most installations. But you see this trend everywhere. You see France has very, very strong regulation, and in the UK, in Italy as well. I think you must see it as a pan-European move.
The demand for sustainably and ethically sourced products has been increasing in recent years, with society calling for greater transparency in supply chains. Tokenizing the supply chain is a key step in ensuring credible product transparency for consumers, in line with growing concerns for sustainability, human rights, and animal welfare. Tokenizing the supply chain is a key step in ensuring credible product transparency for consumers. The technology shows potential, particularly in light of the recently enacted Supply Chain Due Diligence Act, which seeks to demonstrate that organizations have not breached their obligations with regards to environmental and human rights due diligence. It is crucial for companies to document accurately every stage of their supply chain to enable tracking and proving of sustainability to both authorities and consumers. Tokenization technology has made product tracking possible across the value chain. By using a standard smartphone, all relevant product information can be collected and stored in a token which can be used through an app for storage of any type of information. Retrieval of any production step or raw material is possible at any time with a reliable system. Global supply chains can be traced with ease by deploying blockchain technology for documentation. Artificial intelligence can assist in evaluating risks by scrutinizing supply contracts for adherence to human rights and environmental standards. Firms can make prompt modifications to regulatory arrangements as required. Tokenization in agriculture permits farmers to convert their produce into tokens, enabling international investors to invest in regional agricultural commodities. The healthcare industry is using tokenization to manage confidential data from patients and healthcare organizations, while the logistics sector is exploring a comparable concept aiming to remedy an administrative issue through the transfer of the bill of lading onto the blockchain.
So that means that we can expect that if tokenization is becoming part of, let's say, the underlying process setup for financial transactions, that the total market size will be bigger than today's financial asset market volume. But of course, this will not happen overnight. It will happen in different steps, depending on regulation, on innovation, and on general acceptance. We need democratic discussions about things, we need governance. So it could take anything between 5 and 20 years, and it will happen in steps. But the addressable market size will become bigger.
Although blockchain-based asset tokenization has numerous benefits and is becoming more popular, it also has restrictions.
One disadvantage of tokens presently is their scalability regarding the underlying blockchains. If one were to tokenize all securities currently existing in the worldwide securities market and place them onto a blockchain, then the blockchains would fail to accommodate the resultant transaction volume. This would cause the system to become overloaded and overwhelm the crucial drawback of tokens. They do not adhere to a technical standard, but rather operate on the underlying platforms, specifically the blockchains where these tokens exist.
There is a risk of cybercriminals accessing and stealing digital assets. Although blockchain technology is believed to be highly secure, successful attacks on cryptocurrency exchanges and other blockchain-based systems have occurred. Typically, attackers obtained access not through the blockchain, but through their connection points. Therefore, it is crucial to develop a comprehensive and dependable cybersecurity system.
I think MiCA is a great first step. So, if you can think of like a global regulatory waterfall that trickles down, I would say that Europe is kind of sitting at the top, at the crest of this waterfall. And I think that a lot of what we've achieved with MiCA as a continent is now making its way into the regulatory thinking and rationale in other jurisdictions.
Banks have traditionally acted as asset managers. They aim to broaden their range of services and provide customers with the most extensive possible choice. As a result, They have begun to investigate the tokenization of assets. It's possible that in the future, banks may oversee the issuance and trading of tokenized assets. FinTech has become one of the fastest growing industries in recent times.
One area currently undergoing significant innovation in tokens is payment processing. Security tokens provide a relevant example. Bonds, for instance, offer their holders regular coupons, which may consist of an interest rate paid annually. The token can be loaded with vast quantities of information, enabling it to determine the amount of the interest coupon, collect the corresponding sum from the issuer, and then distribute it automatically to the investors. In the conventional banking industry, a paying agent is assigned when a company releases a bond. The paying agent, typically a bank, ensures that the issuer makes timely interest payments and distributes them to investors. This process can be automated using program code, such as smart contracts, with the added benefit of transferring this information to the token.
Talking about the ecological impact of blockchains, I think, is a big deal. But we as an industry have to ask ourselves what's right and wrong, right? A lot of people from looking at it from the outside then think that all that energy is the same energy mix as the energy that goes into our daily consumption. And as much as that was the case, it's changed dramatically. So there's a lot of regenerative energies that have been started to be used, the hydro energy, wind energy, but also solar energy, that basically go into these node computations. And this is energy that never has been used in a consumer's perspective. So it's not competing against the energy that you and I use in our daily lives. More than 60% right now is already regenerative energy that the Bitcoin network actually uses, and the rest is still something to work on.
Financing through tokens has the potential to significantly transform the global economy in the future. Companies can digitally map tangible assets and fund them through decentralized means. Decentralized solutions will supersede traditional financial services.
And I think that in the future, what we're likely going to see is on the side of payments and crypto, and we'll have different digital currency areas. So you could have stable coins and commercial bank money tokens and different kinds of CBDCs, and these will all exist in some, and cash, these will all exist in some, as Germans say, Mischung, right, in some mix together. And I don't think that one will necessarily crowd out the other. On the other hand, I also believe that a lot of why we see an interest in crypto, and I think globally it's about like 23% of people globally hold crypto. In Europe, I think the average is around 17. So we're still on the lower side compared to the global average, but it's growing. And I think it's confidence, right? So like if people don't have confidence in the system, they look for alternatives. And I think that the challenge from a political perspective for the governments, for nation states, is how do we instill confidence in our systems in an age of digital transformation? And there's no easy answer to that question. And I think that at the same time, it might be a little naive to assume that crypto can solve all of the world's problems. So I would say that we need some sort of tempered optimism, right, or tailored optimism.
There is still a lack of standardization of networks, requiring the development of legal standards to provide clarity and security for companies and investors. The impact of this can already be seen in our society, with the technology already prevalent.